Venezuela. While the world slept, the silence was shattered by the roar of low-flying helicopters and the thunder of explosions.
It's an airport. Up the night sky for New Year.
The United States Armed Forces conducted an extraordinary military operation in the capital of Venezuela.
This wasn't just another protest or a local skirmish. This was Operation Absolute Resolve.
In a lightning strike that has sent shockwaves through every trading floor from New York to Hong Kong, US elite special forces, the Delta Force, descended on the capital. Their target? Not a military bunker, but the president himself. Within hours, the unthinkable was confirmed. Nicolas Maduro and his wife have been captured and flown to New York in US custody. For the first time in modern history, a sitting head of state has been forcibly removed by a foreign power in a move that feels more like a 19th century colonial takeover than 21st century diplomacy. But as an investor, you need to look past the headlines. Why now? Was this truly about narco-terrorism? Or is this the final move in a global chess game for the world's largest oil reserves? Stay with us because today we are deconstructing the fall of Maduro and what this new world order means for the price of gold, silver, and crude oil. Part 1. The rise and fall of the bus driver. To understand the end, we must understand the beginning. Nicolas Maduro didn't come from the elite. He started his career as a bus driver and a trade union leader. He was the hand-picked successor of the socialist revolutionary Hugo Chavez. When Chavez died in 2013, Maduro took the wheel, but the road ahead was crumbling. Under his watch, a country sitting on a mountain of wealth became a graveyard of dreams. Venezuela suffered an economic collapse so severe that inflation hit a staggering 1.7 million% in 2018. Over 7 million people fled the country, creating a migration crisis that reached the very doorsteps of the United States. While the people starved, the US claims Maduro maintained power by turning the country into a narco state, allegedly led by the Cartel of the Suns, a group of high-ranking military officers involved in massive cocaine trafficking. The price on his head? A massive $50 million bounty. Part 2. Why now? The real reason for this strike. The US justifies this attack as international law enforcement against a criminal fugitive. But let's be real, the timing isn't accidental. Washington felt their policy of sanctions had failed. Maduro remained in power, and his allies were getting too close for comfort. Venezuela had become a strategic outpost for America's rivals. Russia provided military intelligence, China provided massive loans for infrastructure, and Iran taught Maduro how to evade US sanctions. To Donald Trump, Venezuela wasn't just a country, it was a national security threat, parked right in America's backyard. But there is a bigger, darker reason: black gold. Part 3. The 303 billion barrel prize. Here is the number every investor must memorize: 303 billion barrels. Venezuela holds the largest proven oil reserves on the entire planet, even more than Saudi Arabia. For years, these reserves were locked away by sanctions and socialist mismanagement. Now the US has announced they are going to run the country for a transitional period. Trump has openly stated that US companies will go in, fix the infrastructure, and make money. Part 4. The investor's playbook: gold, silver, and oil. So what does this mean for your portfolio? When the US captures a president, the markets react first and ask questions later. Expect short-term volatility across the board. 1. Crude oil, the great displacement. While Venezuelan production will take time to ramp up, the mere prospect of cheaper Venezuelan heavy crude entering the market is a nightmare for Canadian oil companies. Venezuelan oil is a direct substitute for Canadian heavy crude in US Gulf Coast refineries. Experts believe that prices are unlikely to rise significantly in the short term unless the situation escalates into broader instability or disruption of critical energy infrastructure. However, the crisis does add a geopolitical risk premium, increasing short-term volatility. 2. Gold. The trust deficit. Here is the counterintuitive part. You might see a temporary dip, but watch the central banks. This attack is a loud signal to the world. The US dollar is no longer a neutral asset. Following the seizure of Russian assets in 2022, this move will likely accelerate de-dollarization. Central banks in the BRICS nations, Brazil, Russia, India, China, South Africa, are no longer trading gold, they are accumulating it as a neutral reserve asset to protect themselves from future US sanctions. 3. Silver. The industrial squeeze. Keep an eye on silver. Supply is already tight. With China imposing export restrictions as of January the 1st, silver is becoming a scarce industrial necessity. Geopolitical chaos only adds fuel to this fire. A new era of risk. The US claims this isn't an act of war, but a pro-growth transition. They plan to disarm the militias, secure the oil fields, and eventually hold new elections. But history warns us, from Iraq to Afghanistan, regime change is rarely simple or cheap. For investors, the message is clear. The era of neutral markets is over. We are moving into a world where resource nationalism and hard assets like gold and silver are the only true hedges against a hyper-aggressive US foreign policy. The capture of Maduro isn't just a headline, it's a catalyst for a global shift in how energy and wealth are controlled. Are you positioned for the fallout? If you want to stay ahead of these geopolitical shifts, hit that subscribe button and turn on notifications. The world is changing fast. Make sure your portfolio can keep up.